Hello, this is Todd Hubbs, agricultural economist at the University of Illinois. Today I'm talking about my weekly outlook for March 2nd, 2020. It's a corn use for ethanol update. Today we're seeing the release of the Grain Crush and Co-Products report, which will give us an idea how much corn was used for ethanol production in January. After we got off to a slow start with ethanol production this marketing year, it's picked up substantially. One little note of concern right now is what's this coronavirus going to do to gasoline demand this summer? If it's bad, we could see gasoline demand drop off, which would hurt ethanol production in general and corn used in ethanol production in particular. And we haven't seen very strong exports thus far this marketing year, so if we're going to hit USDA's recently revised projection of 4.25 billion bushels, we need to see this coronavirus not be as severe, or we need to see ethanol exports pick up. And I'm going to talk about that in detail today. This graph's showing quarterly corn use for ethanol production by marketing year, and it's from 2015-16 marketing year through the present one. And as you can see, in the first quarter of the 19-20 marketing year, we did around 12.95 million bushels of corn used for ethanol, which is quite lower than what we've seen the last few years. We saw it pick up dramatically in December and January and through February over last year. So in the second quarter, I expect to see a strong corn use for ethanol number. As I mentioned previously, the potential for lower gasoline consumption during the summer driving season is a note of concern. After the USDA released their WISER report in February, where they projected a 50 million bushel increase in corn use for ethanol, the EIA released their short-term energy outlook, and they lowered gasoline consumption through the summer driving season, mainly due to the coronavirus. And in conjunction with that, they also have a lower ethanol production number. Now, this coronavirus thing could wear out a lot quicker than we think, and with lower gas prices, which are projected through the summer, we could see gasoline consumption pick up. But if this thing hangs around long enough to cause travel plans to change and people don't move around as much, it could be a concern. Right now, as we look from February through the end of the marketing year, last year we did about 3.105 billion bushels of corn used for ethanol. This year, if my estimate for January is correct, we need about 3.175 billion bushels over that same time frame. While it's feasible, it looks like we're going to need to see exports pick up significantly to hit that number to reach USDA's recently revised projection. We have export data on ethanol from the U.S. Census Bureau through December and the official EIA data through November. I do some calculations to figure out where December is, and it's usually pretty close. Right now, through December, we're looking at 473 million gallons of ethanol exported, which is down about 13% from last year. Once again, we see Brazil, Canada, and India as our main export points, with a bit of strength this year in South Korea, which is a positive development. But as you can see in this graph, through December, Brazil's down substantially from last year. Low sugar prices and a higher proportion of the sugar grind going to ethanol, and their burgeoning corn industry has sort of lowered Brazil's imports of U.S. ethanol. And this has been going on for a few years now, and it looks to continue through the rest of this marketing year. So we'll probably come in a little bit lower to Brazil exports this year. Canada is still on pace like they normally are, and I think India will be on their normal pace as well. What's noticeably absent is any imports from China. I do think China will eventually start importing under this Phase 1 trade deal. The question is how much. And their record amount for a marketing year was almost 208 million gallons in the 13-14 marketing year. I don't expect that kind of number this year, or even maybe next marketing year. But any kind of imports from China would be supportive for hitting the USDA's revised projection. Overall, the USDA's revised projection may be in question due to the coronavirus outbreak. Depending on the effects of the virus on the summer driving season, that current projection may be revised lower. If it doesn't turn out to be as big a problem and gasoline prices are slightly lower than last year, we could see really strong gasoline consumption through the summer, which would help ethanol production immensely. We need to see some growth in ethanol exports in the latter half of the marketing year, or else it's just going to be another year of lower ethanol exports for a marketing year. And any buying from China will be supportive of that as we move through 2020. Well, I'd like to thank you for your time. You can find my weekly outlook and daily analysis of issues related to Corn Belt farm economics at farmdoc.daily.illinois.edu. I look forward to seeing you around the state of Illinois.